We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
Welcome back to the Capital Mindset Show, everyone. How you guys doing today? Let me just set up real quick and make sure everything's running smoothly. Let's see here. I see some of you are commenting about political ads. I apologize for that. I don't have control over any of that. I wish I did, actually, because then I would be able to kind of be nitpicky about that. But yeah, how you guys doing today? Hope you guys are having a great day this far. And as per the title of this video, we're going to be talking about, we don't have to talk all the time about that, but we can talk about a variety of different things. And, you know, I'll kind of, again, you guys kind of drive the conversation. And after feedback, I asked you guys, or some of you in the Discord, what do you guys prefer, the videos or the live streams? So what I basically got is, you know, why not both? All right, so just do both, keep doing both. And the videos are just, again, to have that thought process over a period of time. The live streams are for us to, you know, be able to interact with each other live. And people can ask questions live. And, you know, if anyone also has a dispute, it can be live as well. It's kind of fun because, you know, will we talk about Capital Mindset t-shirts? So, no, this is actually something my wife gave me. I don't have any merch or anything like that. I just wear it when I film Capital Mindset. And so if I'm filming Capital Mindset, you'll probably see the shirt on, you know, because why not? It kind of goes with everything. So this is boomer hours. I don't think that's necessarily true because it's 10:41 p.m. Eastern Standard Time. So yeah, there is something I also will probably react to, maybe if we get to it, and that's going to be, you know, gearing towards around something like, you know, something that Everything Money said. So let me just quickly make sure that the chat thing works. Okay, so it does work, and yeah, let me also see and make sure. I'll put this over here, and we shall put this over here. Okay, so I'm just making sure then this desktop will also work. Also, I want to actually ask you guys a question. What do you guys think about Micron? Out of curiosity. I know many of you probably also like Micron, but I'm just curious because it's talked about. It's heavily talked about. Now let me just make sure this works. So I go over here. Okay, so it always reverts to that screen. I don't know why. Okay, so I'll keep it there for now, but it reverts to that screen. I have no idea why. So I have several screens here, and for some reason, it always likes to go to that screen. Even though that's not the highest quality screen, that's like actually one of my, well, it's much smaller than the one in front of me. The one in front of me is gargantuan, and then the one to the side is like a normal. I'd say that's a normal size screen, and then this one's over here. That's the vertical screen, but it likes to go to that one. By the way, anyone who, if you guys want to come on too, I'm like to have anyone on. Investing with Cole, by the way, you can come on. I don't know if it's too late for you, but whoever wants on, you guys can come on. But I'd have to do it like in an orderly fashion. Okay. So, anyways. Let me find what I wanted to talk about because, of course, this is going to be the main stake or the main topic of conversation because many of you probably have been seeing some changes going on and have some questions. All right, so Cole, go to bed. Take off the cap. I can take off the cap. Oh, the people demand it, therefore it must be done. So I just have hat here, I guess. And yeah, that's with the cap off. All right, so. It's like a 50, 60, Pabrai likes it. Okay. Yeah, I know Pabrai likes it, and but I wonder what you guys feel about it, if you guys like it or not. I'm curious. Oh, can you watch Everything Money video before I go to sleep? Yeah, we'll watch that because I know you've been asking for that a lot. All right, so here we go. So this will be the reaction part of the video, and I will, just to be very clear, I'm not reviewing their product per se. Oh, Every Money. Hold on. Everything Money. Oh, yeah, I'm just making sure you guys can see this. All right, hold on, and I got to enable the audio. Give me a second. Okay, desktop audio enabled. All right, so there's a video. I'm trying to find it. Okay, it's this one. I already saw it. So I'll give you the quick and dirty of it. Let me just quickly move this over to the better screen because it's bigger for me and I can see it better. All right, so let's go there, put it in there. All right, cool. All right, so this is where we're at. So this is the video. You might have seen it. It says, which ETF will make you a millionaire, SPY or SPLG? So the quick down and dirty is SPY, SPLG. They're pretty much the same ETF from the exact same issuer, State Street Global Advisors. You can see that behind him. One thing I'll say, that if you're an individual who wants to just buy and hold it forever, buy and hold the S&P 500 forever, I'd go with SPLG. There's also VU, but the reason why I'd go with those is simply the expense ratio. Now, he goes over an interesting take here, which we'll go over here quickly, because I'll just cut to the chase. So around this part, he goes, which ETFs do for you for retirement, or options trading, this part. So he goes over these two ETFs, and he says that SPY is superior to SPLG. Okay, so he's correct, but he's correct almost for the wrong reason. So if I go over this, let's just let him talk. I think he can talk, and you guys could probably see it.
Interested in selling covered calls on your position, this is where your difference is going to come in. You are going to get a lot better premiums on SPY versus SPLG. Let's look at an example here. So the current price of SPY right now is, I'm going to write it in here for you, $419 a share. Okay, so that's SPY right now. I'm going to go out and look at September 16th at $450. September 16th, $450, and you're going to get about 70 cents a share. Okay. Not the worst.
All right, so pay attention to this. This is actually the important part. So it's the strike price. Pay attention to the strike price. The duration is about the same.
Not the best. You're going out about 40 days, 44 days, something like that. So you're going to get 70 cents per share. Now let's go over to SPLG. Go down to the options, and we will go to September 16th again, and I'll run down here. And let's say current price on SPLG is $49. So let's go to about $57.
All right, wait, let me continue.
That's the highest it's going right now. And you're barely getting 1 cent. So the options are absolutely better.
All right, so pause there. So right there, you're going to find out, okay, well, $57 compared to the other one. The thing is, that's about 16% out of the money. The other one was about 7-ish%. So he's comparing apples to oranges there. He would be kind of correct if he actually used the $52 range. It's more or less the same. So he's not completely wrong. The thing is, there's no market for those ones because it's so far out. But he's not technically wrong. Like, it's still better SPY, because if you actually did like the same equivalence, because there's a bit more, you could say, liquidity, around the $52 mark, you get about 20 cents, while the other one you were getting about 70 cents. You also have to consider in absolute terms, I don't know what he was thinking in his mind, but I don't know if he's personally familiar or too familiar with options. All right. But he was kind of just comparing apples and oranges there. The $52 one, which was at 20 cents, okay, with the same duration. The duration's important, so the same duration on both. The other one was 70 cents. The 70 cents ones, remember, you're controlling about 41,900, I believe is the number. Yeah, 41,900 if it's $419. And then the other one is 4,900 if you're talking about SPLG. All right. So in absolute terms, obviously it's going to be different, because the amount of capital you're controlling with the contracts is going to be different. But in a percentage terms, the other one is, let's say, better per se. Well, actually, no, you'd have to actually now do the second part, which is probably the conversation we were having with Cole. So in absolute terms, 70 cents is better per share than 20 cents. But now let's do it as a percentage of the totality. So if we do the $20 premium received divided by, let me actually pull this up in my calculator. So we'd receive about $20 in premium. And oh my God, wouldn't it be funny if he's actually incorrect completely? So divided by 4,900. So that's about 0.4% premium received. And then let's do the other one, which is about $70 divided by the 41,900. My mental math tells me I'm correct. Yeah, so actually it's funny because he's actually wrong. He's actually wrong. He was actually wrong the whole time. So then that's funny because I at the very beginning, I was like, okay, wait, because I'm kind of reacting to this live. So I was like, oh, wait, 20 is, but I kind of fell for that too. So you got to actually bring it up to scale. And then when you bring it up to scale, you see, okay, well, the percentage doesn't make sense, because again, what you're controlling, what you're putting down for that control is different. Now, if you're being technical, I think the actual percent to percent is closer to the 50. No, it's not closer, but it's like, I think it would come out to $52 and 40 something cents if you do a 7% increase from the $49. So yeah, that'd be close to that. And so maybe you can make an argument to round up to 53, but you technically round down to 52. You don't really get many options. Like there's no halfway point, but if there was a halfway point like 52.5, we'd go with that one. But if we're going 52, similar to 53, but if you want to use the 53 one, then he's right. But if you're doing the 52 one now, yeah, he's wrong, because as a percentage of your totality of what you're actually, putting down, yeah, it's wrong. Anyways, so that's actually funny. He's more wrong than I thought. I didn't think come to that, but yeah, he's more wrong than I thought. And the other thing that when I saw this quick look, and I saw this literally, well, I wasn't watching it, I was just listening to it in the car, was this part towards the end. I know it was somewhere around here, but let me see.
Into these savings accounts, the compounding, Albert Einstein said compounding interest is the most powerful tool in the world, and you see it right here. And let's see, by the time you expire and hand all your money off to your kids, are you okay giving them $53.3 million?
So then he said the quote again. But yeah, Cole's actually right. So one of the issues with SPLG is the spread. Well, again, because you have a lot more volume, a lot more liquidity on SPY. That's basically one of the benefits, because I think they even talk about it. At least they talk about that SPLG has about 200 million and SPY has about, 35 billion, something like that. Something like VU is another alternative. But I'd go, for me personally, if I'm buying and holding an index forever and dollar cost averaging into one, I'll just go with the lowest expense ratio. Keep it simple like that. Shop around. There's so many options out there for you guys. ¿Cuándo es el video sobre cheques de estímulo? Yeah, no, there's not going to be any stimulus. So for anyone asking, Keithan is asking about when are the videos about stimulus checks coming out. I don't do videos like that. I mean, that was actually one of the live stream titles, and that was funny. It was a big troll on you guys. Anyways, so that's that reaction. If you guys want any other reaction stuff, you guys can let me know. I got some feedback from you guys about Micron. But yeah, price to spread ratio on SPLG is wide like Rick. Oh yeah, Rick's been doing amazing if you haven't seen. But yeah, we'll talk about this real quick because there has been some changes. So let me actually see. Let's do the zoom to 125. If you guys haven't seen the YouTube index, by the way, if you see here, this past investments part, this will serve in this category for all of these stocks, as we're going to be talking about all of them here today. This one has a video. I don't know why I didn't link that. I should link it, but there's a video about this already. It will serve for these videos here: Bank of America, JP Morgan, Magna International, Barbecue Holdings, Egan, and MPW, which are the ones that we're going to be talking about today. So you're watching it live, but for anyone else coming in later down the road, they're going to be seeing those. So that's basically where that's coming from. YouTube index. Remember, this is apparently my portfolio. I found out, remember? But anyways, in all seriousness, we're looking at this. We're actually positive on the YouTube index now, which is funny. So look how much green we're seeing in the YouTube index. So I totally timed these right. You see with BNGO is actually up 81%. So you can go buy my course. Down in the non-description comment below. And yeah, so some of these stocks are still in the red. So Tesla's still in the red. Looks like the strategy on the right is actually performing significantly better in terms of, not in absolute terms. In absolute terms, not that much better. But if we're looking at it from the perspective of, as a ratio versus the other one, it's doing a lot better. 1.44% return versus 0.36% return since inception. So that's the key, because I started this actually at the lows of a lot of these companies. As you can kind of see that, BNGO is up 81% since this was started. You can see the gains in this hypothetical scenario is $8,183 on BNGO alone. So, but it's making up for basically all the other ones have losses that are so great. They're basically bringing us down there. Remember, I didn't actually have Voyager in here. I was so stupid I didn't bring that in because I should have. That would have been a bankruptcy. Block is apparently our largest dollar amount loss in this YouTube index. Remember, it's a YouTube index. If you guys, again, if I have to spell it out, this is not the portfolio. And the other one, Open Door. So Open Door Technologies is also the second largest, depending on the strategy you're looking at. But yeah, it does appear that Block in both strategies is the largest dollar amount that is bringing it down. Okay, so kind of going over into the holdings, let's talk about some of the changes. So across the board, there hasn't been much change on the bigger positions. Meta's been just very small nibbles here and there. Activision Blizzard, the same thing. Unum Group, we've talked about this one. So right now, those I can sell more calls at better premiums. So I did sell some calls, and I'll actually share that with you guys here. Let me actually find that. I saved it here, but I've already shared this with you guys. But I can sell more of these calls now, which is cool. Let me actually. I think I have it behind this. Let's see. Yes, here it is. Okay, so I wanted to do one on AGRD again, but I couldn't because I have it expires this Friday. So here's to potentially getting that this Friday, but this is the Unum call that I did. And so I was able to execute about 15, and I made a video about Unum. I think I published it last week. Last week was crazy. I know one of you asked about how the exam went. The exam went, I think, really well. Definitely, again, it's definitely a passable exam. Very passable if you take about 3 months of studying. 3 weeks is tough, but I think it's possible, and it's definitely going to be a flex for the rest of my life if I passed it. So I'll find out in about 2 weeks. And then so right now I'm doing the reg, which is supposedly the second hardest, but I mean the difference in difficulty, in my opinion, I actually like reg. I like the material on reg, but the level of difficulty over the next 3 weeks is so much different. This is a cakewalk in comparison to FAR. I'll tell you that, a cakewalk. Like, it's so easy. But I think like it was so good to do that in 3 weeks first, because it's like, okay, just the rest, everything else, is not nothing. All right, so let's go back to the portfolio, but that's Unum. I want to do the same thing with AGRD again on Friday, and I've kind of been rinsing and repeating this strategy this year actually on those two positions. I don't do it for everyone because I think some of them I don't want to even play around with the soap too much. I'd rather hold the position. I'll only do it to stocks that I'm okay and content with taking profits on. You see that Unum right now has reached a point where we're up about 114.26% excluding dividends, and the yield on cost is incredible on that one. Back when we were buying Unum was a time of great pessimism, to say the least, and it's been a really good performer this year. If I even show you guys, let me actually pull up their stock chart for the year, just to give you guys an idea. I've done videos on them in the past, kind of talking about their performances here. But while the market was down, they've actually gone up nicely. They're up about 55.57% year to date, along with a bunch of other insurers. They're performing really well. The difference why they're up so much is because they were basically priced for near bankruptcy back then. It was of the belief that the let me actually do the link here. So share, and then we'll copy link, and I'll drop it here. So here you guys go. I'll drop it here. Actually, no. Let me. I'll do it best in the description of this video. So I'll do edit, and I'll do the portfolio. I should have done that. Sorry, my brain's not still fully functioning. All right. So if you reload this page, it should be in the description, and then you can quickly get access to it. Okay, so going over some of these, again, nothing's really changed in the bigger positions. Unum's designated for sell. I have to update these. These I have to update manually, and it's annoying. So bear with me when I don't update the strategy things. It updates when I sell them. So those are sold, but updating like what I'm doing, like sell, designated for sell, I have to do that manually. It's annoying. But anyways, so Unum is designated for selling. So I'm starting to take profits on that. For now, it appears as though, remember, the Unum calls have a strike price of 35. So right now, if we were to pass the date of December 16, I'm going to lose those shares. Okay, so you can do the math on how many shares that is, but I'm going to lose all of those shares. And so I got a decent premium. I would have gotten a better premium, but I can still get more of a premium on newer calls that I write today, which I'm planning on doing. I'm actually planning on doing that. I didn't have time today. Well, I did have time. I guess, I just didn't get to it because it just takes a couple clicks. And the other one I'm going to try to do after the expiration on Friday is AGRD, because AGRD is another one that I'm kind of content with. We're actually approaching the strike price. So actually, those might actually get sold. They actually might get sold at $45. Who knows? So Aerojet Rocketdyne has performed amicably well since we've been holding it. 16, 15% is not too bad. When you consider the premiums I've made on it since I've held it, it's given us a good amount. It's given us, around almost near 20% when you include premiums. Net of taxes, maybe a little bit less than that because I do have to pay taxes on those. So yeah, Cardinal Health has been performing really well. I mean, that one again also has really outperformed the market this year. So Cardinal Health is up to $70, and you can see year to date it is up 34.86%, excluding dividends. So with dividends included, I haven't been writing calls on them because this is actually one of the ones that, even though I'm up a lot on the position, I'm kind of hesitant to play with the soap there. I actually want to keep Cardinal Health. I'm okay with keeping them. And they were just added by, I think it was like Elliott Asset Management. Elliott Asset Management bought a lot of my positions, interestingly enough. They bought two that I can remember. They bought AGRD. And I think what they're seeing with AGRD is that real estate unlock in value, potentially. That's what they're seeing. But yeah, and we're also seeing them buy Cardinal Health. They bought PayPal. PayPal is the one that got away for now. And yeah, AbbVie, no plans, not doing anything with that, just collecting the dividends. Leggett and Platt, same thing, happy with that one. We're up 16.25%. That's a recent ad. Happy with that one, leaving it alone, collecting the dividends. We got it at a fantastic prices, which is very recent. I mean, this market rally literally snuck up out of nowhere, and some of these positions just crazy rallied. Dropbox is back to a 41.61% gain. I'm just not doing anything with that one. Markel, I'm thinking about adding more to Markel, ruining my cost basis a little bit, but adding at these levels. Markel's one that I want to actually do the video on, but I really haven't had the time. It's one of the harder ones to do a video on because it has so many moving parts. But yeah, liking that one. They didn't benefit as much as like some of the other insurance companies because, again, they have a lot of their portfolio in privately invested companies as well as publicly traded equities or securities. Molson Coors Brewery, very happy with the performance on that one. I mean, this one's now, I'm almost certain that one is over a year old. Yeah, I'm almost certain that's over a year old, if not absolutely certain. Warner Brothers Discovery is one you guys probably just saw the videos on. And Warner Brothers Discovery, I'm going to be nibbling. If you go watch those videos, I basically say that I'm just going to be nibbling. I have the prices where I think the risk is, basically being priced in. I don't have to rush into the quote unquote the next Netflix. I have Netflix. Netflix has performed really well, but we'll see. The story isn't done with that one. LYB, that one, I'm still happy with that one. I've been adding to some more chemical names. I'll talk about those at the bottom, but I did add some of those. I did miss the game Fu Hat. Yes, I apologize for that. But yeah, going down to the other ones, we'll talk about Citigroup. Citigroup stayed within the portfolio. Citigroup is, the longest surviving bank in the portfolio. And then Amazon, can't really add to that one, but it's doing really well. It's doing really well because I've held it for a long time. That's not really because I bought it recently. So ignore that one, but it's still staying the same. Boston Omaha is one that recently rallied nicely, up 26.94% now from the cost basis. That one was one, you guys seen it in, I think, in one of the earliest portfolio videos, and I added to this one and brought the cost basis down lower. It's kind of like a mini Berkshire, but less conviction than something like Markel. You can see it's less than half of the size of Markel in the portfolio. Well, technically because Markel also went up 51.98%. So yeah. Going down the list to Thor Industries. Thor Industries is one that is on the chopping block potentially. That one was one that, I did actually kind of play with the sell with that one. I added a little bit too much where I was uncomfortable. Then I redacted some of the position. Now it turns out, hindsight, it was okay to, have it what it was, but whatever. It is what it is. And then Cirrus Logic, that one's back up to about $88. Maybe it's going to pierce $100 and above. I don't know. I'm still holding on to that one. That one's actually like a long-term play. But with the understanding of the risk, as you can see, that's why it's at its allocation. Okay, so I'm comfortable with that allocation. I have no plans to really change anything to that. BHP, the watcher position, Rio Tinto, the watcher position. No introduction needed for these. Kind of redundant, but I've talked about these in the past. They're kind of just watcher positions because they were much larger before. We took profits on BHP. Rio Tinto really never panned out, if I'm being honest, but we still lowered the position, so still a watcher position. But no, BHP really treated us well. I think we generated about 40-ish% returns on those when we sold. And again, as the saga continues of these portfolio update videos, you guys have seen that evolution over time. Now we're getting to some of the ones that we were selling. All right, so JP Morgan Chase, Bank of America, MAGNA International, MPW, ConocoPhillips has already been sold, and then the additions. Well, we'll talk about the ones that we sold. Okay, so what are some of my thoughts as to why? Basically, what I'm doing here is I was taking some quick profits off of these two stocks, and I actually, well, where do I begin? So with JP Morgan Chase and Bank of America, they are fantastic banks. They're better than Citigroup. I've talked about this. in the past. But I think the rally was so quick that I just wanted to just take the chips off the table. It might end up turning out to be the wrong decision because JP Morgan Chase does profit a lot from the volatility. They have a very strong investment banking arm. But all in all, I'm a bit, it's just me putting some caution into this market, right? So my cautionary take on this market is not selling everything and waiting for things to crash. It's just basically just reshuffling some things. Okay. And we'll talk about the last three because based on those thoughts, you're like saying, okay, well, why are you adding to companies that are, pretty sensitive to economic downturn? We'll talk about that when we get to them. Because Bank of America, JP Morgan, banks are going to be sensitive to economic downturn as well. Because again, they are basically the engines of the economy with their lending businesses. Okay. And then MAGNA International was an industrial player that it's not my favorite company. I got to tell you, it's not my favorite. So that just actually swept in under a cleanup. And you guys seen me do this before. I've done it with Adobe when Adobe was a very small position. And we just basically, it got shuffled into a cleanup. So I just took profits off of MAGNA. And again, kind of reshuffling out of that downturn because I wanted to focus my industrial plays into some other companies, which we're about to get to. MPW, I had some kind of concerns or question marks with some stuff they were having with one of their largest tenants. They were trying to do some funky things with the reporting. So I kind of was like on the fence with them. And the rally, it rallied up a little bit, 12.45% in just a short amount of time. And, I didn't have a massive position in the portfolio with it. So I decided to take some profits off the table. I still think that my thesis on REITs, which so far has been kind of incorrect with a lot of the high quality REITs, not the lower quality REITs or even the industrial REITs. So far with the industrial REITs, they are much lower or markedly lower since we started the liquidity crunch. But a lot of the high quality REITs actually would have been better off not playing with the soap so far, or I would have had an opportunity to sell now had I still think what I think now. But anyways, with MPW, I took some profits off of there, just not looking back on that one. And ConocoPhillips has been sold for a while, so I'm not even going to mention that one. Go back to older videos to hear my thoughts on that. Okay, so the three additions. We have Dow Inc., CE, and BASF. Okay, so the three additions aren't really new to anyone. I've been talking about adding Dow for a while, and I didn't add it at the lows, which is unfortunate. But I added it, and I added it. All right, it's cool. CE, same thing. BASF is the one that actually is more recent, which this one was one that we added on Monday after we talked about some, interesting things on the call on Discord, and some of the things that was talked about. Oh, I also added some today, by the way. I added some to all of them today, but I've been nibbling. So I'm going to be building out some of these positions. My preference, honestly, between these two is in the more risky side is BASF, because BASF's going through some, we can talk about that. And just making sure you guys can see that. Let me put it in the center of the screen. BASF's going through a problem with the war. So the war in Ukraine is having a huge impact on BASF SE. I know this is boring. These are very boring stocks. All three of them are terribly boring stocks. And then Cillians Corporation has taken on a decent amount of leverage. You can see this from analyst commentary that they're taking on all this leverage right before a potential economic downturn. Presently, it is actually the one I have the greatest allocation to. Dow Chemical, Dow Inc., is going to be, it's probably the safest one because they're exposed to U.S. gas prices. And so with that understanding, you understand that BASF is exposed to the counter. So a lot of increased gas prices in Europe, which is a detriment to BASF. Okay, so BASF is the largest chemical company in the world, or once was until the recent price action. Because let's actually go to BASF's price action. And by the way, if you want a cool broker, I recommend Interactive Brokers if you want to buy international stocks. I love that broker. Okay. But anyway, we take a look at BASF's recent price performance. You have the recession in Europe that actually was more or less to cause for this massive underperformance here. And then you have, of course, COVID-19. Well, this ultimate low right here was COVID-19 from here to here. But this underperformance over this time period was basically a recession, a mild recession in Europe, COVID-19, the rise up afterwards. And then this war in Ukraine, you can see, had this massive impact and all the way down to a low of about $10.42 on these shares, of course. But anyways, on the bird's eye view, it looks cheap. The leverage, it's not overly leveraged compared to other companies, pretty normal. I mean, once upon a time, this was, again, over $100 billion company. Still, the operations are still doing good. For now, they've been able to pass on the costs to the end consumers of their products. And you can say, if I wanted to oversimplify what they do, they basically have a hand in everything that you touch. Like all these material companies. They actually had a spinoff, which I won't really talk about the spinoff now, but I'll save that for actually maybe another video. But for the most part, what you guys got to consider is the currency risk and the risk that the war is prolonged. They have a terrible winter in Europe, and something like they can't resolve the energy prices, because the energy prices is, well, you can think of that as the input. And this is having a lot of pressure on a lot of these companies, while Dow Chemical, you can actually see this more recently. There's been a divergence in price. So Dow Chemical, if I put it right next to each other. Okay, and by the way, these are still international companies. So BASF does business everywhere in the world. They produce everywhere in the world. But you can see this recent divergence if I actually go to the 1 month even. And the 5 day, the 5 day is the best chart. But you see this divergence is already kind of accelerated. All right, but anyways. And if you were to go individually, you can see that the percent difference off the top is also different. Okay, so Dow Inc. is another one I'm adding to, again, because it's kind of like the safer ones. And then I'll talk about the speculative plays now. And CRM. Yeah, my wife has CRM, so I'm not buying CRM personally, but she has CRM. So some of these, I basically am changing some of the strategies. So I sold Egan for a loss, barbecue for a gain. And then some of the Egan losses will offset the barbecue gains, but not all of them. Unfortunately, it's not, but not unfortunate. It's good. It's good to have gains. So the barbecue gains, I'm going to basically having this cash pile ready. You can see that I've drew down the speculative investment size. So now it's at 7.71%. And a lot of that was because some of it was growing. I mean, we had Coupang do really well. It's up 46.47%. ASPS is doing ASPS thing. But we'll talk about that. So someone's saying kind of a good point here or an opinion here, and I'll pull up your opinion now. Okay, so well, let me put you up here. So Kathman, I'm not bullish on the German economy and chemicals. The last time there was a boom in chemical in Germany, if you... Oh. I thought it was a serious question. Are you sure? None of these... What the fuck? My Coupang is died. Oh, maybe because where you bought it. Because remember, where price matters where we buy. Meet Kevin in February said if the war happens, there's only a 5% chance it will crash the market temporarily. Oops. Yeah, true. All right, so looking at some of these spec plays, basically what I'm building up like the cash reserves mental cash reserves, because it's all going into the same cash pile. But I'm just like, okay, I want to maybe build out my Zillow maybe a little bit more, because Zillow I still believe in as a speculative holding, and so I can build it out if I see some weakness in there. I do believe that we're going to see a lot of weakness in the housing market. Said this over and over and over again, from going back to the beginning of, or the first Wells Fargo report where we started talking about that. Yeah, the Chinese investments in Prosus is still doing really well. The Baba one is still but remember, I don't actually believe in the VIEs. I was almost getting known for knowing about the VIE companies, for talking about the VIE companies poorly. I would make video after video after video after video. And then I made a promise I'm not going to talk bad about them until they recover. Okay, but I will make content about them. If we ever see Baba at like $200 a share, I will sell it to a greater fool. And then I shall make content again about, the dangers of them. All right, so do you believe Zillow will tell me, if you believe Zillow, please tell me you believe Uber. Well, Uber has to prove some things to me, but Uber, we'll talk about Uber, actually. I'll pull up Uber. Because Uber is doing some interesting things. You almost think that they have to make money at some point. Maybe chemicals could... Oh my gosh, Kath, some of these. Does your wife own Revolve? She used to own Revolve, Andre. She used to own Revolve. She actually made a ton of money on Revolve. But she used to own Revolve. She has some really good insights sometimes on consumer trends. Sometimes no, but sometimes yes. So she told me... this was actually when on social media, I know it's kind of cringe to talk about because it was Jeremy, but Jeremy was right on this one. Elf Beauty, he just didn't have the right allocation to it, so he didn't perform as good as he could have. So Elf Beauty was one that I saw, trending more and more on social media at the time, and it was a company that was once known for just being that very cheap product, terrible product, but a lot of girls were talking about the product actually improving, and they were actually getting in good with certain celebrities or certain influencers, and it was having an impact. It was having a meaningful impact. And then, so she was saying, okay, the products were good, but then I just listened to her, I was like, it's a trash product. Then later she was like, oh, it's actually a good product. So then she was kind of late to that one, but it's okay. Uber over Zillow. Okay, well, Zillow maybe because I understand more. So I'll pull up Uber real quick. We can talk about it. I just had a lot of coffee, so I have so much energy right now, it's nuts. Wait, did Uber come back down? I thought Uber hit $40. I could be just crazy. Yeah, I thought Uber hit like $40 recently. Okay, I am crazy. Okay, so Uber's sitting at right now $64.11 billion US dollars. All right, but Uber's business model is kind of wonky because right now they're spending a ton of money on. Let me actually go to Uber's investor relations and pull this up. Actually, we'll just find it here. We'll just go naturally here. Open link, a new tab. All right, and let's go here and let's go investors. Investors, click there, and then you guys are saying Zillow over Uber. Okay, so I agree with Zillow over Uber, but to each his own because we might be seeing it for different reasons. Okay, so everyone's entitled to their opinion. That's the beauty of a market. Zillow is more easily replaceable than Uber. You know what? To some extent, Uber has like that. Yeah, okay. I'll concede some of that. Like I see why you're saying that. Okay. All right, so let's go to the SEC filing. Let's go to the 10Q. Let's use the PDF version. Bullish on Adobe because PDF is superior to the other variations. Okay, so let's go to the actual income statement. Okay. So revenue, cost of revenues, exclusive of depreciation, amortization shown separately below. So the cost of revenue. Okay, so you see how much the cost of revenue is out of the total revenue. So it's basically half. And this is because, again, how they account for what that revenue is. That revenue is not what like their take home is. So it's not like a custodian's revenue. So when you do it, when you go through accounting, you learn, like, for example, when you take a custodian relationship, the way you account for revenue is going to be different from when you're a non-custodian. So they're basically counting it as a non-custodian, as if those are the employees and that's the direct labor of that service. Okay. So then with that, they're not a platform. They're actually, I can actually see from just the accounting perspective why people are making the argument that they're employees. Okay, just from that, be honest. If they were just, strictly a platform where they allowed the individual, you know what? Probably because they have to, because of the extent of the control they elect onto the pricing. So that's probably why they have to account for it that way. And if I looked at Lyft, I'd probably see the exact same thing. I will see the exact same thing. So it's probably the way they're interacting or the way they're controlling that actually forces them to account for it in that way. That's interesting. So anyways, but it's a software business with terrible margins relative to a software business. So basically what I like to do is, if you want to think about it more directly, let's redact that most of this cost of revenue. And it's somewhere in there is what they're actually as like the transaction fee. So if they ever change their business model, they ever change the way drivers use the platform, where maybe drivers have complete control over their pricing and everything, then they would be able to elect to just recognize the custodial aspects of that revenue. So basically only just the fees that they charge, and that's it. And that would be cool. And then they have, of course, sales and marketing. They spend about $1.25 billion. So they didn't have a lot of that R&D expense. They'd actually be on their way. If I remember the annual numbers, they'd be on their way to profitability or pretty close to it. I know that they probably could achieve profitability if they really wanted to. General administrative, so that overlay on their whole operations isn't too much. Okay, it's only sitting at about 616 million, 851 million. So we got to look at the other numbers, but. Yeah, and revenue seems to be growing nicely year over year as things kind of get moving again, because if people were stuck at home, this number wasn't, not these numbers, the revenue, the line item of revenue wouldn't be growing that much. But revenue really grew nicely from 2021 to 2022, but we cannot pay the shareholders with revenue. We got to get profits or cash flows at least. So let me go to the balance sheet, because I think the balance sheet was pretty good last time I checked. So long-term insurance services, long-term debt. Okay, so long-term debt net of current portion is about $9.2 billion. They have $4.2 billion in cash. And let's see, restricted cash and cash equivalent restricted. Accounts receivable, pay me that money, Brian. Pay me that money. So accounts payable, let me see, short-term insurance reserves. Because again, a decent amount of liabilities there, accrued and other liabilities. I think they also do that because they want to compile all the liabilities together. So even then, yeah, you're basically aggregating a lot of things in one. So I see the arguments now, for that employee argument. Anyways, can you show us the Mike Sensitive Trades BASF stuff? Oh my God. Okay, so let's see some of this other stuff. Challenge to 6-month challenge. I challenged Fuhat to a 6-month challenge. What do you think of Fuhat? I like Fuhat. Ride sharing just took an old school gypsy cabs. the online and took a cut. I scared away Fuhat. Oh yeah, probably. All right, so going over some of this other stuff. No options, just shares. Yeah. All right, so let's see some of this. Yeah, so I mean, there's more questions than answers for Uber. But yeah, just know that they're accounting for a lot of their income or their revenues as basically, like, the reason why the cost of sales is so high is because, of course, the drivers, etc. So I don't sell the shirt, Kethan. There's no shirt available for sale, unfortunately. No. People have been asking me for merch. I mean, it doesn't take much to, like, establish, but guys, there's no merch. All right, so yeah, I'm pretty much done with Uber. So yeah, if you guys want me to look at any other ones, I can also do reactions or anything like that. But that's pretty much it with regarding the update here. Nothing much has changed. Egan sold Egan. Rick's doing monstrably. Rick's up more than freaking Coupang. So yeah, absolutely redonkulous there. But yeah, you could pay someone to visit Rick. It could pay for some of your visits to Rick. Yeah. Yeah, that's true. What's the difference between Airbnb and Zillow? Well, there's a ton of differences between Airbnb and Zillow. I mean, Airbnb is a platform that allows you to do short-term rentals. Zillow, I mean, could Zillow break into that pretty easily? I don't know. There's a lot. Marriott's trying to break in. I think they have a subsidiary that's focusing on the short-term rentals market. But short-term rentals is such a different experience from hotels. People want one or the other. Like, my wife prefers hotels experience. She doesn't prefer the short-term rental experience. She prefers, having room service and all that jazz. Fuhat will not respond. I would put money on it for charity. What do you mean for Fuhat will not respond? I put Uber and DraftKings in the same basket. Yeah, probably. Airbnb is just for rentals for a house. Like, you make your own hotel. Zulu is where you assess the value of your assess the value. Yeah. Assess the value of your property, or maybe even find rentals. Like, the thing with Zillow is the reason why they're still in the speculative bucket is just because they still have to prove themselves. They could end up not in the speculative bucket, but they still have to prove themselves. It's not really something I'm really too keen on. It is late, so Fuhat might have fallen asleep. No merch. I will make my own Capital Mindset mug. All right, yeah, make your own mug. Doesn't Zillow own most spots, and Airbnb is personally owned? What do you mean Zillow owns most spots? Yeah, I don't know what you mean Zillow owns most spots. They got out of the iBuying business. Unless you're referring to another part of the business, or you're referring to the rental business. Without EXPI looks even... sorry, what about EXPI? No, the thing with EXPI is it's basically kind of like a pyramid scheme, or not a pyramid scheme, a MLM of sorts. Or it's kind of a weird structure. So I know some realtors that actually went with them, and they get stock-based compensation. They get basically even more if they bring in more realtors. They get like a portion of whatever they get. It's weird. So it's interesting. It's interesting. All right. So I don't know what. Okay, why am my face is literally in the middle of the logo. I got to get rid of that logo for live streams. I'll put myself up here. Okay. So yeah, that's my thoughts on EXPI. I don't really like them too much. All right. Let me go here to see if there are any other requests. I'm gonna go on the Discord and see. Let me see if I skipped over any comments that I didn't mean to. What is this? According to Mike's status, Fabio's a gas station toilet cleaner, knows a lot about being a custodian. Yeah, absolutely. I'm also the Fabuloso futures dealer. I sell tons of futures in Fabuloso. Have you ever looked at Expedia? Own VRBO, home away, lower valuation than Airbnb. Well, I have looked at Expedia. In the past, my only problem is I don't entirely like that whole market. I think it's as a, like, Expedia, I get it, but I don't really, it's not my cup of tea. That whole area is not my cup of tea, personally, Red Vermont. But I have looked at it in the past. Any thoughts on Mark Cuban Voyager lawsuit? I mean, he did what he did, and that's his problem. You know my thoughts on Voyager. We've talked about Voyager in the past. And yeah, that's why, yeah, I mean, that's really silly of him to do that. That's really silly. I mean, he should have known better. He really should have known better. Thoughts on Booking Holdings? If they get back to 2019 levels, it's only at a 17 PE. I honestly have not looked at Booking. Booking is another one similar to Expedia, but they actually, I think, do a lot of corporate travel. So corporate travel business is a little bit, it's better. It's better. It's a little less fickle. Agree, Google really screwed them getting into travel, but seems an interesting stock. Yeah, I say you're talking about them. Yeah. Oh, can you check out Simon Property Group? Yeah, I can check out Simon Property Group. So that's a REIT, and this is a REIT that focuses on retail. So let's actually bring out Simon Property Group here. Bring this up. All right, so Simon Property Group, let's take a look. They own a lot of not hotels, but A malls. So in real estate, you have, or in commercial real estate, you have, the different grades. They're really easy to follow. So you have A, B, C, and below. And, typically what you'll find with A is probably newer, better location. And with that, you get better tenants, better rates, better negotiating power. With C level, you're going to have probably a higher cap rate. So if you were to go to sell it, you won't get as much. With an A property, you're going to get a lower cap rate, which means you're going to get more for it. Simon Property owns, I think they own one of the most popular malls in Florida. They own a ton of malls all around the country. They own some strip malls as well. And so, there will be a place for malls. I think malls will become more of an experience than anything else. And I think, for example, I still think, like, despite me wanting to only buy from home, other people will buy from the mall, right? Some people like that experience. I'll tell you, for example, when you go to buy a watch, it's a nice experience to go to the mall. Like, I know that some of you are going to be turned off by the idea of spending, any amount of money on, or crazy amount of money on, like, a watch, but there are people who really enjoy that. If you have money, you go spend your money however you want, and if that's something you like, it is a good experience to go to the watch store to, get your champagne, etc. And that's like a nice little experience, right? That you can, like, share. If you're a watch fanatic, you like that. Or maybe you buy on the gray market, I don't know. And then but still, you might like to go to the store where you buy it in the gray market, because they still have stores too. You maybe don't get it shipped to your house. This is what I'm saying. And you can take this or extrapolate from this, with designer bags, etc. You go to the store. You do you, man. You do you. And I think there are a lot of people that are like that. Whether for better or for worse, whether you agree with it or not agree with it, there's a lot of people like that. All right. Like I say, if we invest on just how we feel, I probably wouldn't be buying anything in this. Well, I wouldn't be buying retail at all. I'd be basically saying, oh, Amazon, and that's it. Well, I wouldn't do too bad, actually, with that. But anyways, so with Simon Property Group, we can go by the investor relations, and we can see kind of like their portfolio breakdown. Typically, that's what they have. So let me scroll through here. I haven't been on their website in a long time, so I don't know if they have their portfolio up to date. But we can see the most up-to-date financial statements. And let's go to the balance sheets. That's a joke, of course. Okay, so we see investment in properties cost less accumulated depreciation. So remember, this is the book value of the properties. This is not actually what they could sell it for. That's just what the cost of it, and then the accumulated depreciation. So the book value is about $21 billion. If they were to liquidate that, we'd have to judge it individually. So it does appear that, of course, you can see the book value of the real estate has gone down, and you panic, and you're like, oh my God, it's went from 22.3 billion to about 21.9 billion. Oh my gosh, like the value of the real estate is going down. No, not necessarily. That's just the book value of the real estate is going down. The market value of the real estate might have actually gone up, but we don't really know that because it's not held for sale. We're not actually looking at it or booking it at fair value. Okay, so cash and cash equivalents is sitting still around the same amount. Tenant receivable, so what is owed to them is good. Let's look at the leverage. So if we take a look at some of the leverage, we see total assets sitting at 33 billion, total liability sitting at 28 billion. Well, how much of that is mortgages or unsecured indebtedness? They actually aggregate it all together. Really easy for me to actually tell. And so the rest of it is either paid or was paid with by equity. And so with REITs, you're going to see typically they always dilute you because they're balancing out share issuance and that cost of that equity versus cost of the debt. Okay, so some REITs will see a bit more leverage to debt, others more to equity. It really is a balancing act. And at the end of the day, the REIT operators are going to try to get the lowest cost of capital. And they're trying to get that the cost of capital is less than what they're getting with the cap rates on the property. And malls, I think, depending on the grade of the mall, if you're focusing only on the A grade properties, well, then you're going to get lower cap rates. And so the ones who can afford to get those are the ones who can get the lowest cost of capital. Of course, that's if you're buying them, or if you're developing them, that's a bit of a different story. So yeah, it's a little bit nuanced in that. But from my understanding, from what I know about Simon Property Group, is that they have the most in quantity of A-rated properties. Okay, so they are like the creme de la creme of the mall sector. You could go with like something that's high risk, high reward, like Tanger Outlets, which is a bit lower quality in terms of their properties. But Simon Property Group's that creme de la creme there, and very old company. Okay. Where is his name? Like you guys saw me once on the freaking boat, and then that actually on Strongman's channel, I think that's where it came from. And then you guys just start spreading that name, Fabio DiCaprio. But why the DiCaprio part? Explain the DiCaprio part. I mean, I think it's fine. Oh, and also like I have the name Di because the Di Lollo stands for Di Lorenzo, and so that's the part that yeah, basically. But yeah, so it's Italian last names. My wife hates online shopping. Yeah, because I think they like that experience. I mean, my wife is like, I mean, yeah. All right, so it is because I'm Italian. All right. Did you buy InMode or not? I did not buy InMode. Easy answer to answer. If it wasn't in the portfolio, I didn't buy it, right? So, and I've been actually keeping track of all the past trades. You actually can see on the sheet past trades. I keep track of it, and then I post the video or the video link of when I talk about selling the position. And then basically what you get with that video is like a thought process. Because again, that's what this YouTube channel is, aggregation of thoughts. So you'll see like this live stream as a part where I post for these stocks. So I go to past investments. So these are the ones that since the YouTube channel has been public, I'll post this for these. And then so you'll see this link there. You guys all saw it live, so there's no point in you guys watching it. But for other people who are curious, they can click on that and they can go see it. And it'll be towards the beginning. That's why I like to do so. All the live streams where I do this, I'll try to do it in the beginning so people don't have to watch the full, like however long hours, 3 hours or whatever. Anyways, going back to Simon Property Group. Yeah. As far as the stock goes, let's see, they've actually they performed pretty poorly over the past 5 years, down 25.43%. You can see in the pandemic lows, they were around $60. I mean, yeah. Over the long term, this is excluding dividends. They were up 464%. P ratio, you should not be using P ratios for REITs, but I hope I don't need to tell anyone that. The dividend yield is sitting pretty fat at 6.11%. REITs have to pay out about 90%, they have to pay out 90% of their taxable net income to shareholders. And so with REITs, with real estate, there's a lot of nuances we can play around. Any accountants out there are going, oh, yeah. The will of D. The will of D. All right, so let's go up to land depreciation or something all professional. Yeah, land depreciation. Which, by the way, if anyone is new, that's a joke because you cannot depreciate land. So capital mindset in the future, will bonds be included in the portfolio? No, well, bonds I consider to be like they're not a publicly traded equity, or they're not a publicly traded stock. So they're not really like, so for example, I don't show like CDs. Like if I own any CDs, I don't show that. But like I can talk about it. I mean, it will overcomplicate things if I start adding bonds to it. I just right now have equities. I didn't show like, for example, some inverse indexes on some like treasuries. First of all, by the way, if I ever talk about them, I'd be very cautious to even mention them because they can be dangerous products if used incorrectly. But like another one that I'll talk about that I'm contemplating is like a play on rates going down is a TLT. It's not leveraged or anything, so it's fine. But like just be aware that it will go south if rates rise, right? Not a good thing. All right, but there are ways to play when rates go up too. May I suggest you make okay, so let's see some things. Make a video on all the stocks that you have pumped and dumped live. Can you make a video on all the stocks you have pumped and dumped live? Let's see here. Make a videos on all the stocks. Let me find your comment here because I see them here. Wait, I'm trying to say. I almost skipped this question. Fabio, thoughts on Tyson Foods? I've been pecking. I'm not pecking on Tyson Foods myself because that's one of my wife's positions. So I've talked about it in the past though, under that same context. Basically, yeah, my wife owns it, so I don't buy it, just for the sake of diversification. But she's been owning it for a long time now, decently long. When I say decent long, at least over a year. So the Tyson Foods, good company, best in class of their sector, of their operator. I'd say that there's another vegan food company that we talked about on the Discord, Unilever, who's gone into the vegan food space as well, and very similar branding to the Tattooed Chef. I'll tell you that, which is interesting. It's funny, but yeah, the chicken nuggets. A lot of people seem to like it. Every time I mention Tyson Foods, they point to the chicken nuggets being really good. Good for them, I guess. They make good chicken nuggets. All right, so let's talk about some other thoughts on PKG. Let me remember what PKG is. That's a ticker I don't remember. I feel like that's a REIT. No, Packaging Corp. No, this is different. Is this like International Paper? Company is primarily United States. CEO. Again, I apologize if I accidentally skip over any questions or anything like that. It's a lot of comments that come in, and I try to do my best. So I think this is like International Paper. Let me actually see. Yeah, I didn't know this one. Digital sales coming from products in the United States. The company sells through packaging and paper. Yeah, so it is like International Paper. So if we're comparing, I think they're doing better than IP. International Paper is IP. Yeah, they are doing it better than IP. So the past 5 years, yes, IP has not done as well. I think you basically are only up because of the dividend, maybe. And then Packaging Corp of America. So without looking further, I would assume that PKG has been a better run ship, maybe better allocation, but similar to International Paper and what it is that they do. They make the boxes, right, for packaging. So they make, and they use a lot of paper, so that there's obviously input costs that we'd have to take into account. So every time we talk about one of these manufacturing businesses, you have to take into account costs of the inputs, what's happening to those, what happened to wood prices for that paper, et cetera, et cetera, et cetera. And then of course, on top of that, what's going on with the economy? Are things growing? Are people buying more online, less online? Do we need more packaging, less packaging? What are the competitors doing? Et cetera. Those are some things I think about. Alan, my favorite stock is still Google. I see your comment just came in. Yeah, it's still Google. It's always Google, based on allocation too. But I have some other stocks that I like too. All right, so let me see this other part. I know all California is getting more expensive. Well, California has a Chad tax law that if you guys don't know about it, it's basically the price you buy it at is where the tax rates are. So that was something that they passed back in the 1970s, back when California's politics were very different from where it is today. And so back then, that law that law makes it so that you're not actually priced out of your home. So if you're making a certain income and then the prices of your home rise, you don't pay that tax or that rent to the government, because that's what it is at the end of the day. It's rent to the government. That rent to the government doesn't exceed to a point where you can't afford it anymore. And I think that's actually a really good law. I'd be in favor of that. That'd be something I'd actually vote for if I saw that. But the thing is, you can't mix that, because that also has an incentive for you never to sell, because you can also pass it down to your kids. A lot of people actually like the idea of that, and I do like the idea of that. I think that people shouldn't be forced to move because the value of their area is going up, and let's say they keep the same job that they've always had, or they're in retirement, and the tax bill on that property just continues to rise and rise and rise and rise. But whatever, it is what it is, right? We don't get what we want. All right, so yeah, I think that's one of the reasons why California real estate is so good, right? To own. It was such a good asset class to own. That single, I think it's Proposition 13. So that single asset class in California was so good over those years, right? Because it's something you really just don't have to worry about. So your costs are basically just the maintenance of the property, and you could continue to raise the rents over time. And again, you could pass this down to your kids, and they would inherit your cost basis. So that's awesome, right? Planet 13, yeah, segue into Planet 13. Wait, let me read through some. Okay, it is Prop 13. Steve is confirming that. Or Steve, I think you said it before I said it, so he said it first. Capital thoughts on Taiwan. Okay, we'll talk about that in a second. Love you guys. But anyways, I talked about this on the call, was about real estate in general. So in my area, inventory levels were at 2.5 months, and they were at 3 weeks. So now from 3 weeks to 2.5 months, that's a big jump over the short period of time. So it is showing weakness is showing there, but 2.5 months isn't egregious. It's not where it's like a crazy buyer's market. It's still like meh. Prices are coming down, but we could if things get bad, they'll get to like 6 months inventory. So if we get 6 months inventory out, that's a lot of inventory. And so that would be a buyer's market. That would be like people will be so desperate to like, you know, just please buy my house kind of thing. Because you don't know anyone's individual circumstances. People could be selling for whatever reason. They could be trying to move. They need the capital to put down on the new property. They lost their job. You know, anything could be happening to cause someone to say, okay, I need to sell my property now. And so if we get to that level where there's a lot of competition to sell your house, yeah. But yeah. So let me go through some of these questions. I don't want to skip anyone's question. Stocks have pumped. So I mean, what stocks have we pumped live? I still want to talk about that scam company, but that's going to get its own video. Thoughts on Bubbleson? You see, you guys came up with the name Bubbleson. I'm not taking credit for that, but I love it. Fabio, thoughts on the fact that Bubbleson is who likes CP? What? CP. I forget. What ticker is that? Oh my gosh, I'm blanking on that. CP. What is CP? Oh, Canadian Pacific Railway. Oh, I was like, that's familiar, but I can't remember. Well, he's buying it now. Well, I mean, like, okay, it's an industrial that he's kind of tethered to the economy. Okay, but I commented already on my new Discovery video talking about how he kind of misunderstood the share dilution metric or the share dilution measure, where he's basically just, his software is just aggregating or put all together, not accounting for the fact that Discovery was an old company or the older company. So like it went from 500 million shares to like 2.2 billion shares. And he's like, share dilution. And he didn't know that, you know, the statement of cash flows is just reconciling the non-cash expenses. And if there was a lot of share dilution or share-based compensation or share expense, it would have shown up there, but it didn't. So he didn't know those things. So I already kind of sort of roasted him nicely, like softly, like a soft little roast. But yeah, options are gambling. Options are gambling, in my opinion. Capital Mindset said I couldn't depreciate my land, so I amortized it. Oh my god. I think it's like a different kind of depreciation. Yeah. So someone's talking about covered calls. Yeah, covered calls and stuff. Okay, well, I mean, I do some covered calls here and there. I don't know if you guys are talking amongst yourselves there. Fabio, what's your favorite stock? Still Google. I already answered that. Apple is invincible. Prop 13, Plan 13, buying 5 acre for $1 million. Canadian Pacific. Oh, yeah, you're answering my question. CP, Canadian Pacific, something else. Jeffrey Epps. Oh my gosh. Let's go rail. Shout out to the motherland. You Canadians call it motherland. All right, I'm trying to start a competition. I like Fuhat, but wish to challenge him. And yes, I think I could be a mod. I watch a lot of Fabio. I mean, I can make an additional mod. All right, so we'll make you a mod. All right. I'm going to be more exclusive on the mods, though. Hold on. Wait, how would I make you a mod? Why do I want to let me make you a mod? Huh. It's not letting me make you a mod for some reason. Yeah, it's weird. Have I maxed out my mods? Wait. Maybe the menu is like just not. Oh, there it is. Okay, cool. All right, so I won't make everyone a mod, so don't ask, but I'll make you a mod for now. Do not abuse your power. By the way, the rules for mods is simply this. Only ban spam. Like spam, you know what kind of spam I'm talking about. People disagreements and all that stuff. That's all that. That's a different kind of channel. All right, Fabio, make your mod. Make me mod, por favor. Yo hablo español. All right. Okay, you're joking. Okay, I'm gonna one mod per stream. Because I'm gonna be making everyone mods at that point. All right. Yes, honor the title. The title comes with responsibility. So responsibility of, this is still like allow people to talk and stuff and stuff like that. If anyone wants to voice grievances, challenge or whatever, cool. Heavy is the hand that holds the wrench. Yes, dude, just make all of us mods. Yeah, but then I'll have like one guy abusing the power. It's fine. All right, so thoughts on Taiwan Semiconductor since it's so cheap right now. It is 100% not cheap. Last time I checked. So TSM, it is not cheap right now. I mean, like, okay, if we're looking at it from this perspective, let's see here. Okay, so Taiwan Semiconductor, if I look at it from, okay, so it's basically down again probably because of certain threats. Let's see here. It's down, okay, but it have hit all-time low, down 45% from the peak. P ratio of 18. I mean, okay, it's cheap if you know, we see like a boom after this. I'd have to look at this. I don't know. Interesting you brought this up to me, though. All right, so let's see some other ones. Only means for the stream. Heavy as hand. Thoughts make from a unmod coal. It's cheap because it's about to be Chinese semiconductor. Yeah, that's like my assumption. That's in my entire assumption. It's probably just cheap because of the threat of China. We talked about that in the Intel video. Like, that's where Intel stands to gain, but also Samsung stands to gain as well. It was cheaper in the 70s. Well, of course, it's cheaper at any price lower than the current price. My man, check out Perry. What's Perry? Check out Perry. Oh, Perry on Network. Oh, Perry on Network. Yeah, you're talking about this. So Perry on Network. Yeah, look at this absolute monstrous performance in the past 5 years. Up 593.72%. The fact that I know it's from one country, excludes it immediately. I'm just kidding. All right. So, but yeah, Perry on Networks. This is a company that I saw it on the list, and I actually want to go over this one and another one that is actually pretty interesting. But okay, it looks cheap on that basis. But let's go to the website. All right, we're going to their website. Investors. Okay, so what exactly? Let's see here. And let me go back to their website because I actually want to see what they have here. Solutions, publisher platform, search, about, sort, high impact creative. So a lot of advertisements, right? Actionable monitoring. I can see that. All right, so our tech, Bolt, SparkFlow, Mission. Okay, so then I'd have to look at like, well, how do they compare to everyone else? And then they don't have to be the best at what they do, but they just have to be good and at the right price. And then let's go to their filings. Okay, so let's see here. Let's do 2022. Oh, 2022. Let's do a current report. Actually, I want to do an annual filing. No, oh sorry, I got rid of the wrong one. Let me do an annual filing because I want to see the big picture here. It's not the most up to date, but I want to see the big picture. I'll see the most up to date later. And then we have to do that. I always click on financial information thinking it is what it is. Oh, here we are. I just have to scroll down more. All right, so they have two types of sales breakdown, two different line items, display advertising, search advertising. How harmed were they by the Google changes in Google is my question. I mean, it doesn't seem like from 2020 to 2021 it was, but yeah. Okay, let's take a look at that. Okay. Let's see here. Okay, so cost of revenues. I mean, wow. It's really high gross margins. Stupidly high gross margins. What the hell? Traffic acquisition costs and media buy. Okay, well, that's where it's pretty costly. Sale and marketing, general administrative is fine. Okay, so assets, let's see this. Long-term liabilities, long-term lease liabilities, long-term liabilities, payments, obligation related to acquisition. Accounts payable, short-term. Pretty solid. Yeah, pretty solid here. I mean, they basically have everything enough to pay all of the liabilities here, and that's not even including their cash they're generating from their operations on top of that, just on the cash that they have. Okay, so pretty solid. Okay, so let me see what you're saying here to me, because then that gives me some better. So you're a Perry shill. Yeah, I kind of know that. You're very bullish on Perry. Okay, so they're the best. With their short is pretty dang good. Oh, their short is pretty dang good. Sorry, not their short. Their short is pretty dang good. Trading at 5 times EV, enterprise value to free cash flow. Wow, that's pretty cheap. They've expanded their margins when their costs had stagnated for falling margins. They're exposed to iOS. They aren't exposed to iOS at all. Oh, that's good. The product sort, in theory, should profit from iOS and Google transitioning away from cookies. Oh, that is why. So no, quite literally the opposite. All right, so the opposite of what I was thinking. So, okay, that makes sense. So this comment right here, their product in theory, okay, so in theory, right? Okay, and then you see he's giving us some more context here, guys. So sort is a contextual advertising algorithm. Okay, so wow. All right, so that makes it actually interesting. I mean, it'll be hard for me to buy something when it's done so well, but we that's not why we should do things. Now the market cap is pretty small. Wow, just the other year it's a penny stock, but it's no longer a penny stock because it's performing. All right, no, I'm gonna take a good look at this, and then if I decide, I mean, it's worth my time, I'm gonna buy it. I like to make money, so They also tied to Microsoft and have a good chance of getting Netflix ad revenue. Wow. All right. Pump it. No, we're not going to pump it, but I'm interested. What do you think of the current market rally? Okay, so someone's asking about what I think about the current market rally. So I guess you're referring to a lot of these stocks. So Tattooed Chef rallying 11.79%. Yeah, I think that it's part of why I changed into a bit more cautious, like why I reshuffle some things, because I don't know, I'm kind of like spooked by this, to be honest, but it's fine. It's not like I'm going to sell everything and just wait for prices to be lower. But I'm still going to be trying to find companies I like and adding to them. I just wanted to, get rid of some of the gunk in my portfolio. Some of the things I wasn't really too focused on at the present moment in time. Not to say JP Morgan and Bank of America are gunk. They're not. It made it sound like that, but yeah. Don't pump it. Day trade it live right now. Well, I'm going to do a recording of me day trading it, and I'm going to say it's live. That's what I'm going to do. Yeah, it is very spooky times, I'd say. I think that if Perry stays this low, they will get taken out at some point personally. Maybe. I know that a lot of Israeli companies always pretty much just trade cheap. They just do. A lot of Israeli companies just trade cheap. Some Israeli companies are really under distress. I'll give you one of them that's like under distress. Hold on, let me think of it right now. It's Teva. I mean, I don't like the company. I'm just saying it's under distress. So it's been under distress for a long time. You can see this abysmal performance. Yeah, just look at this, for example. So you can see that the mighty massive exuberance for the generics drug market over, I guess, since its history. And if you had invested in it all the way back then, you are still up 1,942.59%. excluding dividends. They used to have a dividend, and this was at the pinnacle, similar to Micron. When Micron, if you remember Micron stock, some of you weren't around for Micron stock, but Micron stock went through some very similar performance back in 2015. I'll show you the company, what it's like today. But yeah, Micron performed terribly after 2015, similar to Teva Pharmaceuticals. You have the new CEO who's come in with Teva. He's been there for quite some time now. I think he's Swedish. That's not important, but fun fact about him, I guess. And so he's trying to make changes, trying to turn this company around, another Israeli company. So they've looked cheap. I think a lot of articles have been around for this company being, oh, it's so cheap and stuff, but it's cheap for a reason. I think their debt levels were absolutely ridiculous. So if I go to, their website, look, cookies, we're talking about cookies. I reject your cookies. No, I'm kidding. I don't accept your cookies. So our impact and careers focus. All right. I want to go to their financials just to make a point here. Let's go to the investors. I'm blind. Where are the investors? Oh, there it is. Top left-hand corner. Yeah, let's go to the site. Let's go to the global website. And let's go to the financials. Let's go to the quarterly. Let's go to the SEC filings. I like familiar territory. All forms. Let's go to annual filings. And we'll go and see. Hopefully they show us the previous years. So, in fact, I'm actually going to go to the 2020. Let's go to 2019 as well. All right, so let's put them side by side. So let's go here. I'm showing you basically the evolution of this company. Again, this is a case study. We're just looking at it for the fun of it. Getting a little bit nerdy here. All right, so I'm going to click on your, there we go. All right, so that way you guys can see it. So basically just pay attention to the long-term debt. So this one is, again, the 2021 report. So go to the long-term liabilities, senior notes, and right here, you can see that. So sitting at 21 billion, so it's down from 22 billion. And let's go to the previous report of 2019. And then let's go to the financials and go down to some of, and let's go to the, right here, total long-term liabilities. Right here, you can see it here. So they've actually done a decent job of bringing it down because it was sitting at about 26 billion, 28 billion. You can see the evolution over time. And a lot of that was accumulated from massive acquisitions. So that's what the CEO has been focusing on. Honestly, he's been executing. So this is this company. And you can see the massive, again, downfall of this company. What is the market cap trading for now? I mean, now it's what? Yeah, $11 billion. They have still double the amount of debt versus their market cap. That shouldn't be like a fixed metric, but it's just interesting to note. And I remember people talking about it even back around here, that it was like a good buy, right? Even around here, that it was a good buy. You know, kind of ignoring a lot of these risks here. But yeah, like after this drop here, I remember a lot of people saying, oh yeah, this is the buy, just like completely ignoring the fact that, you know, things are about to hit the fan. CEO came in around this time period. I honestly forgot when he came in, but there's also this company, which is an American version, VTRS. Pretty much the exact same. Oh, wow. It's just so happens that they're around the same price. Difference between this company is that they're selling their biosimilars business. Teva, I think, is keeping it. They still have a dividend. I don't think they should. I think both of them should be just paying down the debt, basically deleveraging as much as they can. You can see this was Micron. You can still see that the link here is Micron, but they're not Micron anymore. So this again was the merger between Micron and Upjohn, and now they're together. But Andrew Marshall's saying, yeah, Israeli companies get a bad reputation, but contacts who I have in the ad tech industry who were pretty staunchy against Perry when I first invested called me after the last ER, and we're really impressed with what they're doing. Yeah. So like, the thing is, a lot of Israeli businesses can be really good. Like, for example, Intel's Israeli division is perhaps where all of the value is produced. Quite literally, like all the value of Intel's business is produced there. So if they got rid of their Israeli, and by the way, Mobileye is in Israel. So yeah, there's a lot of value there. We can't like dismiss a country entirely. But it is cheap. Like the American companies just have an American premium on them. Okay, so Viatris does trade, I think, more expensive. Last time I checked, I think they're about the same. No, Viatris is bigger now. But same thing. When we go to the website, let's go to Viatris. Let's go to the investor relations, go to the friggin' SEC filings. We're going to see pretty much the same story. So I'm just basically just showing you. So don't take my word for it. Just literally look at this. 10K. Let's go here. Let's go here. All right. So let's just find the financials. They don't have the hyperlink. Piss me off. Yeah. All right. Here we go. No, wait. No, that's the executives. Oh, I skipped it. I probably went right past it. Oh, wait. Did I click on the right one? I click on the right one? Oh, I didn't click on the right one. Ha. I clicked on the 10K, the amendment. All right, so going back here, let's sorry. Now, okay, that I was like, why doesn't it have a hyperlink? That's never seen that. All right, financial statements. So I just want to show you guys this real quick. So you guys go here, again, go to the long-term debt portion. It's a very similar story. See, told you. You guys can see it for yourself. They're bringing it down as well, but like, they're both really leveraged. They're both leveraged from a bygone era when people were very exuberant about them. Let me go to the max okay, Google finally doesn't show the max. But if I had Mylon's stock price, you could go back in like 2015 and you would have seen the massive jump up. And Upjohn was Pfizer's generics business. So this larger company is supposed to have synergies and all that jazz that they kind of pitched to everyone. So, oh my gosh, you guys are so funny. Thoughts on Ray J? What's Ray J? Yeah, what is Ray J? Thoughts on, oh my gosh, shorting Israel. That's funny. Take a look. If you like Israel, you should look at nice stock. What is nice stock? NICE. I'm putting it on the other screen. That's what I always do, just in case. Something crazy. What is this? Israeli company specializing in contact center software, telephone voice recording, data center. Yeah, I don't really like that kind of stuff, but okay, it's at $13 billion. It's done pretty well over the past 5 years. Done pretty well since inception. Yeah, I mean, not really for me. I don't really care for these kinds of companies, but yeah. It's probably a low-cost provider, low-cost solution, because I think there have been American companies that, actually I think one's here in Florida, Psych company or something like that also does this. But yeah, what do you think about UMC? My valuation models show the very bullish and the experts say I'm invested, but I'm worried. UMC. What is UMC again? What is this? United Microelectronics Corp. I remember UMC. They had a lawsuit with Micron that they won. They basically stole stuff from Micron, from what I remember. I mean, something's weird about this. This is a Taiwanese company, right? Yeah, Taiwanese. Yeah, Taiwan. Some people call it a Chinese company, but it's Taiwanese. I think it was in Chinese courts that they sided with UMC, and I believe it was believed that the judge presiding over the case owned shares in UMC to kind of highlight or show you kind of what the corruption's like over there. Oh my gosh, you guys are hilarious. Yeah, I'd say like UMC, what Catham's saying is an opinion that, maybe you want to hear, but yeah, no moat. I think Micron, they don't really do the exact same thing, but okay, they also spin off of the government. Yeah, I forgot about that about them. There's a lot of things about them. What do you guys think about Micron? I'm curious. Because Micron's one that's always asked about. I already asked you guys at the beginning. Hazard, why did I sell BAC? Just as a cautionary take. It's not really this bad company. I just was moving stuff around. I talked about it at the beginning of this video. Scariest movie of all time, 28 Days, Aliens. Yeah, what do you guys think about Micron Technologies? I know that they're now, I think, the low-cost producer in the industry. But, I've done videos on them in the past, and of like the semiconductors when I talked about them. It's like, it's what Bruh's saying right now, where it's like with regards to the memories business. Like, I know Pabrai loves it and all that jazz, but there's something I don't know, and maybe I'm the one he's talking, not me specifically, but my concerns are like the ones he's referring to when he's talking about, there's a lot of people who are skeptical about this industry. They're skeptical because of the past decade or so, where it's basically been commoditized, but now it's pretty much a triopoly in essence. But really, like I know that some people are saying that the feasibility of China building out their own capacity to produce this is rather, like, it's questionable whether or not they're able to do it, right? It's not as easy as it sounds. Micron seems like it's a forever value trap. Yeah, that's what I always feel like. I mean, I think with Micron, at some point maybe it changes, right? At some point maybe the industry does shift, and so you get that. Like, are you going to participate in that change, or do you want to participate in that change, or maybe it's just not for you and you just move on? Like, I'm kind of on that camp. But when I've done videos in the past, I was honest. Like, it does appear like it's cheap. It looks cheap, but there's so much more to that than just looking at the surface. I think Micron tricks people who don't know anything about semiconductors to invest into it. Yeah, like, because I think it's because the super investors are investing. That's why I get asked about it a lot. I think for the general is everyone's basically saying it's not their cup of tea or it's not for them. Okay, because we have a lot of people working in the semiconductor industry who follow Capital Mindset. You guys share your thoughts a lot. Hard to value given the cycle unless you take advantage of the multiples. Take an average of multiples. Yeah, okay. People buy it because it's a cheap semiconductor company. It's much more nuanced. Exactly. Taiwan Semi TSM is my favorite semi-stock. They are amazing allocators of capital, have a lead over their rivals. They have a huge lead over the rivals. Entrenched contracts in the huge fabulous chip makers. They have a great reputation. Yeah, they have the best by far. I mean, there's Samsung after them, and then Intel's like a little bit further behind. And then really far away, you have Global Foundries, I think. CapEx is a big problem. Yes, CapEx is a big problem for a lot of these companies like Micron. Yes, because they have to constantly be expensing more and more and more. And we talked about how a lot of their cash flows were being recognized. There were some interesting parts about their cash flow recognition versus their net earnings when we last talked about Micron, or maybe I think it was like 3 or 4 videos of Micron ago. Micron cheap without the underlying quality or strength to push it above the cheap treatment. Yeah, I think so. Yeah, I'm on their year-end audit, and they're about to. Bro, I know you're joking. Oh my gosh. All right, change of topic whenever you want, but I really like Oplex now. Kind of impressed with their brand. Insane margins. Their management seems really smart. Valuation is a little high. Yeah, I asked my wife about Oplex, OPLX. So let me actually ask her right now because she just came in the room and she's doing some work next to me. So I'll ask her. Let me see the stock. OPLX. All right, so let me remember how to pronounce that. What do you think about it? It's really good. But what about it is really good?
It actually works.
It works? Like, do you use it?
Yeah.
You do?
Yeah.
Do you buy it?
Yeah. No, the salons do too. Like,
We have some here?
no.
Oh.
Well, I kind of ran out, but I have to buy more.
Oh, you ran out. You have to buy more? All right. Well, there you go. So, yep. So, Oplex, good product, apparently.
The salons buy it too.
The salons buy it. All right. But I see what you mean. So, on the surface, it looks really expensive at a 39.20 PE ratio. I think they just recently went IPO. And I think I remember Dumb Money talked about this once or something like that. Because when I was scrolling through Dumb Money, I think I saw a video about this, if memory serves me correct. They did talk about it. I don't know if someone can probably fact check that or make sure that that's true. But yeah, I'm actually the CEO of Taiwan Semiconductor, and we are sandbagging our numbers. Buy the stock. The money, the goats. Wait, I can't tell you that. Yeah, JP, I know that's funny. Yeah. All right. Anyways, so yeah, Oplex. I mean, it looks pretty expensive on the surface. Let's kind of look a little bit deeper. So that's actually I have seen these bottles around. So yeah. Anyways, so our results are roots, hair, diagnostics, shops. Oh, this is another one that I actually want to show you guys. So we'll talk about Oplex. Well, actually, we'll talk about Oplex and I'll get to the other one. Olaplex. Sorry, Olaplex. My gosh, what are you? I'm not gonna say it. I was gonna make a joke, but all right. So let's go to investors. Corporate profile, presentations, Olaplex overview. Let's see this because I'm a prospective investor. Show me the overview. Sell me on the story, man. All right, so let's go. All right, so Olaplex. Look at all that healthy hair. All right, let's go down here. Innovation, marketing. Okay, I thought it was buzzwords. Okay, marketing operations. That's not buzzwords. That's just like, okay, how we just disrupted. That's a buzzword. Results in our disruptive DNA. Buzzword there. Community-based. That's a little buzzword. De-risk innovation with the continuous feedback to loop with our community and community-based data-driven performance. Asset and CapEx light model like that. All right, if that's true. Okay. So basically, operating income of about 68%, net by sales channel. Okay, this is what we were talking about. Professional. So the salons, specialty retail, direct to consumer, the people. United States, their most important market. International. So they are an international company. Let's see here. Wow, look at my revenue, my avenue. So if they continue to grow.
Basically, everybody that dyes their hair blonde, like they put Olaplex inside of the formula. Otherwise, it's gonna fry people's hair. So like every salon, like when they're dyeing someone's hair blonde, they put Olaplex, so it looks healthy.
Okay, so then my question now becomes, Okay, so I'm now intrigued. So basically, my wife's explaining to me that if any girl goes, not any girl, but if you go to one of these salons and you're there to dye your hair blonde, they're going to apply this to your hair so it doesn't burn your hair. So it's like a must. So now my question then becomes, okay, what's the patent like? Or how are they protecting this formula? And then how easy is it to replicate? Is there any competitor coming out? Because right now there's a premium because they're probably the only one. They have the right to win for now. They're the number one brand. There's very similar ones, but they're not as good. So that's telling me that they are protecting it well. And if they're expanding like they are, like this growth is like, okay, basically they're a necessity for that particular service if you want a high quality. Because I imagine that the other ones is like when you get a lower quality service done to your hair. And for girls, their hair is very important. So I would hope that if you're doing stuff to your hair, you're not doing stuff that's bad for it. But anyways, global. Okay, so global hair care. I love that they're doing this. All right, so this is making me exciting. I'm foaming at the mouth here, just like looking at the 82 billion TAM, and we're looking at what's the size of this company? All right, so therefore it's trading at 9 billion. Oh my God. All right, I did not know that, but anyways, $82 billion total addressable market, guys. They're just going to consume it all. Anyways, in reality, they're kind of like a one-hit wonder kind of thing, as far as I know. Indicator makes their hair healthier. I don't care about that really, but one kind of engagement community. But I guess like if they're actually saying that and they have that brand reputation, I guess for us guys we don't really know about them, but for among women, if they have that reputation, great. They have patents. There are some competitors coming out. I think K1 is a competitor. Maybe ask your wife about the brand if she knows it. Do you know K1? K1. She doesn't know that brand. Ugh. Intel is bruh at 50. Oh. Apparently it's a competitor to this Olaplex or whatever. Or recommendations from hairstylists. Treat, maintain, protect. Okay. Yeah, K1. I don't know about this K1 sweets.
Like the letter K number 1.
Yeah, letter K number 1. That's how it was spelt out. Nikado avocado can consume the whole fast food market. Olaplex can too.
I haven't heard of K1.
Yeah, you haven't heard of K1. If she hasn't heard of K1, it's irrelevant. No, I'm kidding. All right, so tribal dynamics. All right, so anyways, what the heck, bro? Oh, okay. Sorry, hashtags on Instagram. I was like, what is Apple doing on the same chart as Olaplex? Okay, it's hashtags on Instagram. So they're very popular, is what they're trying to say. And this is, yeah, okay, cool that they're saying that. Investors are foaming at the mouth for them to get into skincare. They did a third-party study, and I think 40% say they would switch to Olaplex skincare sunscreen. Oh. I mean, yeah.
Sunscreen? Supergoop is the brand. Supergoop or Alta MD. They're two top brands.
But they're saying Olaplex is getting into it.
That's good to know.
Oh, she said that's good to know. Would you switch to Olaplex?
I don't know. I really like Alta MD and Supergoop.
Oh, you like an Ulta product.
Wow, which product?
You said Ulta MD.
No, it's not Ultra.
No, Ulta.
No. It's not from Ulta at all.
Oh. Alta. Oh, okay. I was misunderstanding her. All right, Alta AMD. Oh, sorry. It's K18 is the brand, not K1. K18. It was a typo. Have you heard of K18? No? Okay. So, no, she hasn't heard of K18. All right. That is such a random question, bro. The has anyone slept on a nail bed? Okay. All right, so what is going on? You guys are talking about Intel over here, just endlessly about Intel. Oh, I guess just bullish on Intel. Some bullish takes on Intel, some non-bullish takes on Intel in the comments here. Intel CEO is like a fine, blah, blah, blah. Okay, not sure if you covered this or not, but are you still planning on releasing the model this month? No. We're trying to keep it like at a high quality, and I have a lot going on right now, and so does the developer. So we're still working on it in the back end, but no. So I'll be upfront and just tell you no. No, but I watched waterbeds are due for a comeback one day. I'm going to buy waterbed companies and wait for it. All right. But anyways, it's really interesting if they can actually manage to get into that. If it grows into that valuation, like there's nothing wrong with buying a company that's expensive now if it's actually going to grow into that valuation, depending on how confident we are. So the quality has to be there. I'd take a deeper look at it because it has come down. It's at least half of what it once was. And so I'll take a look at it, like a serious look, because, I'll tell you, women drive the markets, guys. Women drive the markets. Look at the Becky index. You guys who know the Becky index know the Becky index. Look at the Becky index. See how that's performed. They drive the markets, all right? They are so much of spending.
Blackstone bought Supergoop.
Blackstone bought Supergoop?
Is one of the most popular stocks.
Ladies and gentlemen, Blackstone is a buy. Blackstone. You sure?
They bought Supergoop, apparently.
All right. Blackstone's a buy. That's
That was in December.
Blackstone's buy. They bought Supergoop. That's a game changer. That's a game changer. Just from a chemicals perspective, you might be archive similar results from similar type of chemical compound. Yeah, that's what I'm saying. Like there's like something similar comes out, and then there's going to be competition. And if it gets similar results, yeah. Can you ask your wife to make Portuguese video trading on Petrobras live? She won't do a Petrobras trading live. That'd be funny though. No worries, A1R9. But we're planning on working on. We're working on it diligently. Okay. Yeah. For what it's worth, people are testing things. We are going through alpha testing, so we have people testing. It's just I'm going through all these exams in like literally 3 weeks a piece. Sorry.
Was an engineer for Petrobras.
Yeah. Okay, but that's like there's a lot of engineers for Petrobras. Bros is better. Coffee. I don't know about business. Okay, so I can talk about Bros. I was going to do a video on it because Bros is not exactly what it looks like. I want to do a lot of content like that. Right now, by the way, Daniel Sol said we're closed for alpha testing because we only can take out a limited amount. So we got enough that we needed because, we're trying. It does use cloud space, okay? So, but we will be expanding it in the future, okay? Once we start paying for more cloud space. Compare it to BRCC, Bros Coffee. What is your drink if you want pre-diabetic? I heard it's very sugary. I did hear it's very sugary. Are there interesting beauty stocks? The price? Oh, okay. So before I forget, so I'm actually going to look at Olaplex. Oh my gosh, forgot the name of the company already. But I'm going to take a look or show you guys another one that is interesting. You probably never even heard of this company. If you're a dude, you haven't heard of this company. And even if you're a chick, you might not have heard of this company. This is a company called Helen of Troy. So it's actually rallied. What? Oh, no, never mind. It hasn't rallied. I thought, okay, yeah, it's still pretty much down in the dumps. Well, from all-time lows, it's rallied about 12%. All right, so anyways, this is Helen of Troy. Something interesting about this company is it owns a brand that women are pretty familiar with. It's called Dry Bar, and a variety of other brands. I'll show you in a second what kind of brands they own. But let's go to Helen of Troy. So they focus pretty much on exactly what you think, women's products. Just women's products in general. Just like they basically focus on hair products, etc. In fact, it's not like a formula or anything like that. It's basically, a lot of these consumer products. So they have beauty, they have Hot Tools, Dry Bar, they have health and wellness, Honeywell, Pure, Brown, Vicks. You might know some of these, OXO, Hydro Flask, Osprey. So similar to I'd say they're like a Newell brands, but like geared towards the feminine side. So if you don't know Newell brands, I'll show you Newell brands in a sec. I have too many tabs open. Hold on, let me start correcting this issue. Always with these live streams, I end with like 1,000 tabs because so many like 10Ks, 10Qs, stock prices pulled up. Let me get out of here. I'll keep that open. I'll keep this open because I didn't want to look at that later. Keep that open. Move this away, this away, this away, this away, this away. All right, let's stick to these. All right, so Helen of Troy. All this jazz. Let me show you Newell Brands. So NWL. Newell Brands is the owner of Sharpie. This is the one that Carl Icahn was heavily involved with. I think he put his son in charge of this. Must be nice. Let's see here. Investor relations. Or no, I just wanted to show you the brand. Sorry, not investor relations. That was out of. Okay, so this is what they own. You can see in the writing segment, the food segment, home fragrance, commercial, baby, outdoor recreation, home appliances, all that stuff. Maybe you didn't even know this company existed. So you have Helen of Troy, which is kind of like that kind of retail experience. Like you'll see the products maybe in similar places. And then they also have some services like Dry Bar and Hot Tools. They own Dry Bar and they own Hot Tools, which is also like a brand that you actually can buy. Did they get rid of Bedhead? I think they got rid of Bedhead. Yeah, they got rid of Bedhead. They used to own Bedhead. They got rid of it. How does that make you feel? If you prefer the tools of Bedhead, or was it Bedhead? Yeah, I think they got rid of it. They used to own Bedhead. You notice things after you like look at these companies for a long time. I've never owned this company, but I knew they owned Bedhead, and they just sold it, I guess. Let me actually make sure and Google that. Did they actually sell it? Yeah, what the heck? They don't have it listed here. Or they don't have it listed there. That's so weird. I mean, they might not have sold Bedhead, unless I'm blind, and they just have their brands elsewhere. Like all of their brands listed elsewhere, but it's not shown here, and I'm not seeing anywhere where they got rid of their licensing agreement or anything like that, if they had one. But I'm sure Bedhead was there. Yeah, I know they acquired Dry Bar back in 2020 for about $255 million. Revlon, where's Revlon too? They own Revlon as well, or they used to own Revlon. So these are some changes that I didn't really. Okay, so I didn't notice. But anyways, I'm not invested in it, so it's not like a big deal that I don't know that. Hostile takeover from Paris. All right, what are we talking about? Well, Helen Troy has offices in El Paso. I was thinking about interviewing there. Oh, you were thinking about working at Helen Troy. Small world. Trojans are the worst product on the planet. Do they sell Trojans? No, Trojans. Who sells Trojans? I believe that's Unilever. Wait, who owns Trojans? I think that's Unilever. Unilever. Click here. All right. Unilever is also a pretty solid company. They've had really consistent high returns on invested capital. I actually wanted to talk about Unilever anyways. So let's go to view brands. So Unilever has some really interesting brands, and let's go to the 400 brands. Yeah, no, it's like nuts. This is basically like right now a crappier version of Procter & Gamble. I'd actually like to buy their brands. I'm trying to find the food ones. 7th generation, explore more brands. Give me all the brands. All right, here we go. So where is it? They have Magnum. Fun. Result on this page. Show me 48. Oh, this is like their tattooed chef brand. It's so tattooed chef-esque. I don't know. What do you guys feel when you see this? So, yeah. Oh, Zeus Devo. I'll answer that question because I can give you guys. Do more vlogs. Vlogs? Like, what do you mean vlogs? Like just... you just came out and you said bye. Helen Troy bullish on Alexander the Great short term. Yeah, so I mean, it's so tattooed chef-esque. That's the vibe I get from this. So I mean, with Unilever, you're getting again a company with all of these brands, right? And they got rid of their tea brand. You know who also is getting involved in Unilever? Very similar. I think it's Nelson Peltz. Nelson Peltz has gotten invested in Unilever around here. He's going to do very similar changes. For those of you who've been in the markets for long enough, you remember the era of Nelson Peltz and Procter & Gamble. So back in the olden days, like around this time period, he was heavily investing in Procter & Gamble, making some changes or trying to make some changes. He was successful. Basically, a lot of his criticism back then for Procter & Gamble was they're getting out of touch with the consumer. They were losing market share to white label products. And then Unilever, similar thing. I think that's maybe why he's getting involved. Who really knows? But well, obviously he's getting involved because he thinks he's going to make some money. So he's going to try to change things up around to fit what he believes the company should do. He's buying up his shares. He's going to exert his influence, etc. So I feel like I want to rue. Yeah, go rue, man. Church & Dwight. I can look at Church & Dwight too. So I was going to make a video on Unilever and Church & Dwight and Clorox all in the same video because they show an interesting, and Procter & Gamble, because they show an interesting difference in strategies, breadth and depth. So any of you guys who study marketing know that part. So breadth and depth with brands. So Depth is when you have a ton of brands. Breadth is when you have basically the same brand into a variety of different products. Church & Dwight is a good example of breadth. Clorox also has a bit of breadth and depth, not as much as, for example, Procter & Gamble. Procter & Gamble and Unilever have a lot of depth. Procter & Gamble also has a lot of breadth as well. So yeah, we can discuss. Let's see here. Let's see how discuss the Inflation Reduction Act. So please, main concept of climate change stuff, Medicare negotiation, Medicare $2,000 cap, ACA credits, and 1 stock percent buyback tax. So surprisingly, Morgan Stanley really likes it. Anyways, some of the stuff with the Inflation Reduction Act is like pretty redundant, such as like the book value, the minimum tax rates, like the book value and the trying to make it like a minimum tax rate on on book income. So for those of you who don't know, there's discrepancies between book income and tax income. So there's taxable income, book income, and there's discrepancies which don't really make too much sense because over the longer term, they do kind of match. So a lot of the discrepancy comes because the depreciation schedules are different. IRS has some interesting rules where they're actually more aggressive. So they're actually better, but the government is the one who makes those rules. So it's like, why didn't they just change the rules? I don't know. So it's just going to make taxes a little bit more complicated. The 1% stock buyback tax is just basically just an additional tax. I mean, you still have the win because you're at 21% corporate tax rate, which is pretty competitive globally. And now you're getting, the government's, getting some taxes. Taxes are for more or less to incentivize behaviors more than anything really. But it might be interesting to see how corporations change up their strategy of maybe how they allocate for that. Do they reduce the buybacks? Do they change the way the buybacks are done? These are all going to be more business for large consulting firms, which is really good for them. I think those are like the biggest winners in this, and I almost guarantee you there was like some sort of hand at play there. Some of the other stuff, again, if we really delve deep into the stuff about climate change and everything, that's again going to be pretty good for the consulting firms. A lot more business for them. Oh, okay. Yeah, okay. So we're negotiating drug prices as a take. I mean, yeah, sure. Why not try it? To me, I like it's if it has an ulterior effect, it has an ulterior effect. A lot of times, policymaking is like playing a game of whack-a-mole. You think you're fixing one thing and you're causing other problems elsewhere. At the end of the day, people who are well off aren't really going to care. It's not really going to affect them. I can tell you, like for example, you can see this every time there's like a problem in a lot of these countries where government does things that are bad, so to speak. The ones who are well off won't care really either way. It doesn't really matter. It never matters. It doesn't matter as much as people think it matters. If you want to mess with things, go ahead and try. Okay, so Church & Dwight is a Bubbleson stock. All right, so Church & Dwight, if we actually look at this one, CHD. I mean, this one is expensive. I can probably tell you that right off the bat. But anyways, over the past 5 years, it's performed amicably well. This is what I'm going to show you guys. Basically, the difference in breadth and depth. So, they own Trojan. Okay, there we go. They own Trojan. All right, there you go. So whoever was complaining about Trojan. So this, you might know Arm & Hammer as this massive, brand that they put on everything. Toothpaste, laundry detergent as well, dish soap. So if it ever loads, I guess it's not going to load. All right, so Arm & Hammer. Cool, Arm & Hammer. All right, awesome. All right, cool. I was like seeing how many pictures are there. All right, but yeah, you have a lot of different things. So all them have the same branding. So this is otherwise known as breadth. Very easy. Like just think across the board. Depth is down the line. All right, so negotiating drug prices isn't nearly as important as negotiating drug availability. Yeah, that's what I was wanting to say. It's a very testy topic, so I don't like to get into that kind of stuff because people have strong opinions in either case and don't want to be like a political channel. But yeah, Nobody got any action with those. Yeah. Some people think I have different political leanings than I otherwise do, but yeah, it's not a channel about that. Let's see some here. TTCF, Moat Kappa. Oh, someone was going to bed. That makes more sense. Joe Schmo, do you have any thoughts on Walmart earnings or opinion on Target earnings tomorrow? All right, cool. I can actually talk about these because it's going to be similar to what I thought about before. So Capital Mindset, do you have any thoughts on Walmart earnings or an opinion on Target earnings tomorrow? Where would you start a position in either of these? So with Walmart and Target, what I want to be paying attention to tomorrow, I'm going to listen to them regardless, or at least the snapshot. I'm going to be paying attention to the discretionary spend on their receipts. So how is the consumer spending on these discretionary products, which was a big weakness back when they previously reported before. And it was something we were talking about then. Same with Target. I'm going to be paying attention to how is the consumer reacting on the discretionary side of the spending. Gives me a feel for how they're feeling. Oh, look, you know, it's funny. Tyson, remember how you bought Target? Yeah, it's back to like 180. Yeah. So Dark Knight, I talked about it in the beginning. I already bought Dow. It's actually already updated too. So yeah, you can see Dow in there. I know that you're asking because I've been saying I was going to buy Dow for a while. Fabio asked me if he could trade for Trudeau. Trade? If I could trade? Oh, that'd be funny. Yeah, well, Target's kind of recovered. What the heck? Yeah, it's up like 26%. All right, so let me see this last part. Fabio, to think about the 420 stocks. Prices fell off the cliff. I think the one I'd be interested in is just this one. Otherwise, it's overly competitive. I'd like to own like the real estate. That's about it. That's all I'd really like to own in that space. This is the one that I'd actually be interested in. That's about it. I don't think CE. I don't understand CE. Do you not think the debt burden will be a big risk? Yeah, I talk about that in. Well, actually, I haven't made a video on it. Well, actually, no, I did make a video on CE. But I do talk about it in that video. So they're basically taking on a decent amount of leverage. A lot of the talk around this from analysts is I think, correct. So they're talking about how CE took on a decent amount of leverage before a supposed economic downturn. So that adds a little bit of risk to the play. Management is still buying something that they're relatively familiar with. It's another chemical business. It's from DuPont. And yeah, all in all, it's not like, okay, CE is getting into a wholly unrelated business line. It's something that within their circle of competence. But it is awkward timing, to say the least. I mean, the acquisition was like $7.5 billion. They are making enough money right now to afford it. I think right now projections are that they're going to have a good year this year, but 2023 is going to be tapered down. So that's going to be less than 2022. And then 2024 starts to be a question mark. 2025 obviously a question mark, because 2024 is a question mark. But basically what you need to know is 2022 will be okay. 2023 will be down. 2024 most is like flat to down. So yeah. Let's see here. All right. So I was just seeing if there was any last minute questions. With that being said, guys, thank you guys so much for watching. It is time for me to hit the hay. Thank you guys so much for watching, and I will see you guys on the next one. Bye. And I'll, throw you guys the outro.
We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.